Everyone knows about Apple, right? I mean, I have an Apple Watch on, I'm holding an iPhone. Apple is all around us. What's cool is that they're also a publicly traded company, so you could own a piece of Apple, but what's not so cool is that they're trading around $430 a share. That's a lot of money to buy a single share of Apple. So that's why they're doing a stock split. Welcome back to the channel, I'm Jacob Fisher, and today we're talking about Apple and their upcoming stock split and whether or not you should buy in before or after they do the split. I think before was that way and after was that way. It's confusing on the opposite side of a camera. I'm not a financial advisor, I'm just kind of talking to a camera which then gets uploaded to YouTube, so let's just tap the like button and get into it. Apple recently had earnings and so did a lot of other tech companies, and they all kind of just blew it out of the water, and they've all been just going on in a tear the past few days after earnings. The cool thing about Apple and their earnings is that they announced a 4-to-1 stock split, so that means for every one share of Apple you own right now, you'll actually own 4 post-split, which is on August 31st. Typically, companies do this to allow more retail investors to buy in at a lower price. Rather than spend $400 for one share, they could spend $100 for one share or $400 for 4 shares, just depending how much you want to put in Apple. Not everyone has fractional shares through Robinhood or M1 Finance, and this just allows a wider berth of people to get in a share of Apple. This also kind of provides a psychological benefit where you would rather buy a single share of Apple at $100 rather than spending a whole $400 to buy a single share. What a split does is sort of increase the amount of outstanding shares, which is what you and I can buy, also allowing more people just to get in. If you've heard of low float stocks and reverse splits, speaking of reverse splits, if you see a company does a reverse split, please don't buy them. They're just not a good company, and they do a reverse split so that they look more like a solid company than before. For stocks with higher floats, such as Apple, they barely move much when a ton of money comes into them. But a low float stock like Kodak, for example, has a significantly lower float, and a lot of money being pumped into them would drastically increase the price of the stock, hence what we saw just last week or so when Kodak went all the way up to $60. Apple, on the other hand, might trade the actual cash volume that Kodak traded that day just in the first few hours of it moving around, and you don't see it flying 400%. That's sort of what outstanding shares and float help with a stock to keep it more stable. Apple has undergone 4 splits in its lifetime: a 2-to-1 split in 1987, a 2-to-1 split in 2000, a 2-to-1 split in 2005, and a 7-to-1 split in 2014. The reason they've done this is to allow more retail traders to get in and kind of purchase the shares rather than kind of keep people out of buying the stock. I think Amazon would really benefit from doing this, as they're sitting over $3,000 a share right now. It's just hard for me to go out and buy a share of Amazon because I don't want to spend a good portion of my portfolio in owning one single share of Amazon. Even though I have fractional shares through Robinhood, I still kind of want Amazon to do this so that more investors can get in with them. I might go out there and buy $5 worth of Amazon and get 0.0001 or whatever it is of a share. That could be kind of fun. Anyway, let's get back to Apple and whether or not you should invest before or after the split. I don't think Apple is going anywhere anytime soon, nor do I think they're going to declare bankruptcy because of the sheer amount of cash reserves they have. They could probably open up a bank and just be fine lending out lots of money to people for really low interest rates. They could also significantly increase their dividends, and they have increased their dividends year over year, which is also something I'm looking for in a stock. They're at around 1% dividend right now, I think, but I mean, they've been increasing them, so that's good. Plus, they could also be considered a growth stock. Make sure you check out my other video on that, but that means they're going to grow greater than the S&P 500 on average. Also, recently, retail traders have actually made up about 25% of the market. That's more so than usual, and they have a good bit of buying power to get in right now. This leads me to believe that more retail traders will get in post-split, hopefully increasing the amount of volume traded on Apple and increasing the overall value because more people want to buy it. That's, supply demand. That's my guess, and we'll see what actually happens post-stock split. Apple is a solid all-around investment to have, which is why I don't think it necessarily matters when you purchase them before or after split. Now, if you can't buy fractional shares of Apple, probably wait till after unless you want to put $400 into Apple. historically, after every split that Apple has done, they've increased in value, and actually they've just increased in value every year. So the best time to buy was yesterday, as Warren Buffett says. If you do have fractional shares, I don't think it would hurt to go out and buy a quarter of a share of Apple, and then when it splits you get a full share. That'd be kind of fun actually, and I might try to do that in my own Robinhood to get a quarter of a share, and then it'll turn into one. I have never held a stock during a split, so I'm kind of excited just to experience it, even though it won't be that exciting, amazing, or whatever you want to call it, thrilling. It's still going to be an experience that I've never had before. Let me know down in the comments if you already own Apple or if you're considering adding it pre or post split. I just want to know. I upload videos on Monday, Wednesday, and Friday on travel and finance, so if that sounds like of something interesting to you, make sure you subscribe down below. Thank you so much for watching, and until next time.